You're listening to the VBMA podcast.
Welcome back, everybody, to another exciting episode of our VBMA podcast. Today, I am so happy to have Darby Affeld, Doctor of Veterinary Medicine and Financial Advisor and partner of North Star Resource Group, as well as Max Miller, their in-house disability insurance expert.
Thank you for having us, Jasmine. I've been excited to join you.
Likewise. Thank you for having us on today.
Of course. You know, the reason we brought you guys in today, as I'm sure your titles have clued our listeners in, is to talk about disability insurance. It's something that has come up in a few of my conversations at CSU within our own local chapter of the VBMA. And it's something that I had not thought about until like 6 months ago. And I feel like it's a very important topic that really needs to be shared nationwide with all vet students as they're, preparing to graduate and looking into kind of what is disability insurance and why do we even need it in our profession.
Yeah, what a great topic, Jasmine. I think I'll kick it off by saying, I went to CSU too, so go Rams. When I stepped out of clinical practice, sold my practice and exited, I wanted to become a financial advisor because I'm fascinated with business and financial topics. So I like to make veterinary analogies. I'm sure not calling anybody a sick dog here today, nor my client. But I think that it might be helpful to kind of look at it in the context of that, because when we go into vet med and we approach a case, we want to look at everything comprehensively. So disability or any kind of insurance, for that matter, to me, is like vaccines, right? We want to vaccinate people against the what ifs of life. And, when a veterinary client brings in a kitten or a puppy, for example, or a foal, we want to talk about vaccinating, but we're sure not talking about TPLOs. So what we do is we focus comprehensively. But we do want to take a deep dive into disability because it is very, very complicated insurance. So hopefully this will be helpful to kind of sort through what is it, why do I need it? I'll start with just sort of a general concept about why in the world, because I think most of us think this will never happen to me. Right? Mm-hmm. And it can. And I actually have some experience going on in my own life right now with a partner who's disabled, didn't know what disability insurance was before I met him. So in general, 1 in 4 people are going to become sick or hurt before the age of 65, disabled. And the average disability lasts for 2.5 years. So if it would be a problem if your income stopped for 2.5 years, the one that we're working so hard to earn, then we want to look at insuring it. So, and there's different types of disability. Today, let's focus on long-term disability. Short-term disability pays for a short-term, like 90 days, for example. There's other links, but typical. So let's focus on long-term because obviously, coming out of that school, depending on what type of career path you're going to take, you could earn over $10 million over a career, probably worth insuring that. And if you really got sick long-term, you'd want that to keep coming in the door. So there's 3 ways that we can protect our long-term income. There's group or employer offered. There's association, and in our industry, that's AVMA. And there's private. So group, association, private, those are the 3 ways we can protect our long-term income. And they're really not all equal. And really what this comes down to is understanding that the insurance carriers, just the companies behind all these products, they know the statistics that I talked about. So if an insurance carrier does 0 medical underwriting, they don't ask any health history questions, it should stand to reason that statistically, 1 in 4 people are going to go out on claim on them for an average of 2.5 years. And so carriers that ask no questions at all the definitions that are within any disability policy are critically important to pay attention to, and they're complex. Conversely, carriers that ask very careful health history questions, not everybody gets a policy. And sometimes maybe somebody has a pre-existing bad back, for example. They might get a modified offer, like, hey, we'll make a payment for anything else that there's, I think, Max, correct me if I'm wrong, there's like 13,000 things the World Health Organization says could cause a disability. So we won't pay for your pre-existing bad knee or bad back, for example, but we'll cover everything else. That's called a modified offer. So to wrap this section up, if a carrier does careful medical underwriting and not everybody gets a policy and other policies are modified like this, it should stand to reason that those carriers are statistically less likely to pay out claims because they were careful. So what the right fit for you is really dependent on you specifically.
Yeah, I think that is a great overview, Darby. And I think just to kind of add to that, there's going to be situations, again, everyone's situation is different. What makes the most sense is going to vary. There's going to be situations where we use a combination of private insurance and group insurance, or association through the AVMA and a group plan through an employer, right? But again, we on the front end are diligent about medical history, educating on all the options and figuring out what is the best fit. So just know going in, well, this might be high level on the podcast and we touch on some things briefly. These are all things we can get into to figure out what makes the most sense for you. Because what makes the most sense for Jasmine might not make the most sense for your best friend, Red, who's graduating with you. So just keep that in mind.
And I'd add to that, at North Star, we're really fiercely product neutral. We don't work for any one carrier. We don't represent one carrier. And to me, that's important. It's kind of like vet med, you know. And I always like to say, who makes Cerenia? I mean, I don't really care. I'm sorry, Zoetis. It's a great drug. We'd use it maybe if Elanco made it even. So the veterinarian, the clinical practice veterinarian, is going to have an array of products on their shelves, depending on what they're trying to accomplish. And so we work the same way. So what we like to do is help assess all of their options and help them find the right fit specific to them.
That's awesome. That's awesome. And I love that you kind of related to vet med and how we're, assessing each case and then prescribing the best treatment option for every situation. And when it comes to disability insurance, I didn't realize that there was so many different types of options. Like you said, the employer group versus, what'd you say, like professional?
Yeah, so
like
it's
through AVMA
group or employer offered. And a lot of times the consolidators, the corporates will offer those as a benefit. Sometimes they're just given for free. And then other times they're offered as a voluntary benefit that you'd opt in or opt out of. So that's group. Okay. And then association in our industry, obviously it's the AVMA. They partner with New York Life. That's an option. And then there's private. There's lots of private carriers. And again, there's a lot of very detailed information within any disability policy that really matters. So, we spend time educating people on what the little definitions mean. And there's, Max can go into a few of them. But the point is if you can't do your job, if you get sick or hurt, you can't do all the duties of your job, there are some definitions that are stronger than others with respect to whether or not you can collect a benefit.
Are there different types of limitations based on which path or type of medicine we pursue? Like, it's known that you're more likely to get injured or hurt working with large animals, specifically within equine medicine, versus, say, small animal medicine, where you're not as likely to be disabled from your job long term.
Yeah, that's a great question. Max, do you want to answer that?
Yeah, I'd say the biggest factor with that, so when you're looking at private insurance, the carriers are going to use what we call an occupation class without getting too granular there, right? That's a way for price the policy based on the actuarial risk of the duties of your job, right? So to your point, large animals, higher risk than working in a small animal clinic. There's not really going to be a limitation in terms of how you're covered, right? The policy will cover you in that occupation if you use the proper definition. You'll just end up paying a higher rate because of that higher risk occupation, if that makes sense. There are some unique opportunities there. For example, we have what we call a simplified underwriting program with one of our carriers that because of the relationships we have and do at various schools, you might be able to get classed more favorably at small animal. But again, those are specific scenarios. So it just kind of depends on where you're in training, where you're graduating from, and what.
Yeah, and I'd like to tag on to that. That was really helpful. A lot of people think, oh, I'm going to go into small animal medicine, so I don't really need disability because I'm not going to get hurt. And I think that the preponderance of disability claims are illness, not injury.
Yeah, it's roughly 90% illness versus 10% injury. And frankly, that number might change a little bit if you're looking at vet medicine versus general public office professional, but that tells you right there, the vast majority of disabilities are things that can keep you out of working at least full time, regardless of your occupation. That risk only goes up when it's something as specialized and physical in nature as veterinary medicine.
Yeah, so just that right there, if 90% of all claims are illness, we sure don't want to assume if we're going into small animal that we don't need it.
Right.
Yeah.
And again, we do have programs that we've worked hard to set up with many of the carriers where, just looking at disability right before graduation can secure some really neat policies that may not charge large animal rates. And, even if you're going into mixed or large animal. So it just all depends on the school and it depends on the relationships. But that's why it's important to look at all the carriers right before graduation, because there are some programs that are favorable.
Interesting. And so if you were to look at, trying to get into a more favorable program, would you talk to somebody from your school or would you reach out to like a company like NorthStar, if not NorthStar?
Yeah, great question. The schools would need to be insurance licensed in order to be able to help. And, it's also like vet med, right? Like I haven't practiced for a really long time. And I'm not going to say how long because that would just date me. But the point is I don't remember a lot of my vet. Now, I remember how to spell diabetes, but that's about it. I don't remember all the treatments and drugs, and they're always changing, right? So same with insurance. Products change, carriers change, features change. So I don't really go to the school to ask because they wouldn't really be in the industry, right?
Got it.
And so you really always want to work with an advisor, and more specifically, advisors that really truly understand this product. One of the reasons I chose to work with NorthStar is because of all the experts that we have at home office in anything, whether I'm looking at investments or employee benefits or Max is our disability expert. We have life insurance, long-term care experts, investment experts, annuity experts, financial planning experts, estate planning. It goes on and on. So I liked NorthStar's setup where think of me like a GPDVM with a lot of areas of expertise, but I have board certified folks at my access. And so with respect to disability, I'm commonly emailing Max and saying, hey, I found this client. They have this particular policy. Can you take a look at it? Share what it is and what it isn't. For example, should I give them a high five and say what you have is great? Now, of course, after doing this for 14 years, oftentimes I can look myself, but there's some really little details that sometimes I just don't know.
That's awesome. And that's awesome to have so many people in your corner at the same time.
Yeah.
I think that speaks to, again, just kind of our belief and process at NorthStar as well. And again, in supporting Darby, right? She's kind of like the puppet master of everything that she's going to help you do with the financial planning long term, right? But being able to call on the experts and dive into each piece individually is so important. And that's no different than looking at your DI options as well, whether it's through us, someone else, making sure that you're kind of getting that education around it so you know exactly what you're looking at and can make an informed decision. That's one of the biggest takeaways I always have, because we come across so many prospective clients, right, where they don't get that level of attention or education from other folks. And that's okay. But now, at least talking to us, we can kind of go through that with them and get them to that point where they feel like they're making an informed decision.
Yeah, and I'd like to tag on to that too. I mean, the reason why I work comprehensively and not just with insurance, for example, or not just with investments as another example, is because the whole picture is really important. I like that med, and it's how I was trained. You know, we could be building a beautiful portfolio, but an accident or an illness wiping out an income could take that out right away, right? Or conversely, later on in career, 7 out of 10 of us are going to have a long-term care event. And so we could build a beautiful portfolio for someone's retirement. But if somebody's spouse has a long-term care event, I can take it out. And so I believe in insurances to support the plan and the wealth that we're trying to build. And one of the things that I think maybe your listeners might find interesting, which I didn't know before I got into this industry, is nobody can mark up or down insurance rates. They're all set by the state and the carrier. So you can't go to another agent or advisor and get a different price if it's at the exact same carrier and designed exactly the same. It'll be the same price to the penny. So that's really good for consumers of insurance to know that.
Mm-hmm.
Obviously, there will be price differences between carriers, right? But if it's at the same carrier designed exactly the same, and there's a lot of different ways to design disability, that's good to know. So your listeners are really going to want to work with someone who really understands disability and not worry about going down to the next advisor, getting different quotes. Because if they're the same, it'll be the same price.
That's really good to know. So you had mentioned kind of like building wealth and over time, just having those protections in place, but may have a lapse in time where, income is not being generated. And a lot of veterinary medicine is women, and a lot of them are looking to get pregnant and start families over time. So how does maternity leave kind of play into disability insurance? Is it something that is even covered, or is that completely separate?
Yeah, what a great question. Max, I think you'd probably, I know the answer, but I know that you'll have more detail than I do.
Yeah, when it comes to pregnancy-related disabilities, you may have coverage. We talked about group coverage through your employer, right? So once you go out into practice, if that's something they offer, that's typically where you're going to see disability insurance cover maternity leave or normal pregnancy, right? Individual DI policies are not going to cover that, or frankly, even individual short-term plans. There are limited options, but you can get short-term private coverage on the private market, are not going to cover that. And one big piece to that is the adverse selection or adverse risk, right? What they want to avoid is someone coming to get insurance knowing, hey, we're planning on starting a family or getting pregnant in the coming months, and I'm going to go on and expect to use this DI policy. That is a type of claim where someone can look to do that. So that's a big piece to why they don't cover it. The other piece is with private disability, there's what you call an elimination period. So how long do you have to be disabled before you can claim benefits? I would call the industry standard with a private policy is a 90-day elimination period. You can go a little shorter, you can go a little longer. That impacts pricing, but 90 is the most common. So for most folks, if you define a normal maternity leave or pregnancy, you're not even going to reach that 90-day point. Now, it will cover complications of pregnancy. So if you go through a pregnancy, there's complications, and that's what keeps you from becoming or going back to work beyond that elimination period. Now, that policy can pay benefits. But typically, it's not meant to replace that typical maternity leave or time off. I don't know, Darby, is there anything you want to add to that?
Yeah, I think that's a great description. So again, long-term disability really isn't going to cover maternity leave. Short-term might, but it's rare to find a private short-term policy that'll cover it. It's typically offered by, larger groups. Now, I do know that the AVMA offers short-term disability with maternity leave. Okay, but you have to do the math because you have to add up what it costs to buy the short-term disability. And I don't work with AVMA disability insurance, so I'm not positive, but last I heard, they only pay for 4 weeks of maternity leave. So you just have to do the math. What's my benefit going to be for 4 weeks? What did I pay for this policy going in? So maternity leave can be a little tricky. But again, like Max said, if you have a disability arising from pregnancy. So for example, sometimes people will be put on bed rest. And for sure, after your waiting period or your elimination period, a long-term disability policy sure would pay if your doctor said, hey, you can't go to work. I want you to be in bed. Or goodness, something bad happens at birth that prevents you from being able to go back to work. That sure would be a claim. So it's really individual, very, very tricky. But it's a great question. And it's good to talk to an advisor about, like, hey, what are my benefits here?
That makes sense. And so when we're thinking about finding an advisor and going through these process, kind of what are the key things that we should be thinking about or talking about with our advisors?
Yeah, I love that question. I've been meeting with one-on-one with new grads since I think like 2014. I've met with over 3,000 new grads. So building little comprehensive financial plans, and one part of that, of course, is making sure that they're situated with the right income protection coming out of school fit to them. But I think I hear a lot of things, and I think the biggest thing to remember is I believe in product neutrality. As a veterinary client, if I were bringing my animal in, I would want the veterinarian to lay out treatment options, right? Like, I don't think it's probably right when we have a Great Dane with dermatitis for the veterinarian to say, hey, your only option is Convenia. It's going to cost $3,000. Dramatic. When he might eat a cephalexin, like a dog treat, that's $22. So it's just important. It's important to say, hey, here's your options. Let's find the right fit for you. So product neutrality is something that I would look at. The other thing, and it's just my own belief system, is maybe consider working with someone who's going to help you with everything. Like, look at your student debt and look at your new income and figure out your take-home pay and talk about whether your new practice has a 401k that you can participate in and what the match is, and, help you build an emergency reserve and future goals, right? Like, hey, we're a resource for you if you want to buy a house, you're getting married, you're having a kiddo, you want to start a practice or buy a practice. Comprehensive, it's just my belief system. You sure can work with someone who just sells disability policies. There's plenty of folks out there that are good at that. And maybe you don't need comprehensive help. I have met people who say, hey, my father is a financial advisor, so I don't need all your comprehensive services, but I do want to get a really good income protection policy in place. So that's fine too. Max, would you add to that?
I think it comes back to a couple points you made, right? The product neutrality. I think that all comes back to the education piece to it, right? And what we believe. So it's whether I was helping you look at one policy because that's the carrier you've decided on for one reason, or we're looking at the 5 main carriers like we often do. It all comes back to the education piece of what's within this policy. What makes the most sense for you, and do you understand that? And I think to your point, as a comprehensive planner, there's a lot of value that goes into having everything under one roof. Again, if you have that taken care of, you just want insurance, we can help you with that as well. But when you kind of look at understanding from the start why we even talk about disability insurance, right? Everything else that you aspire to do with your financials long term, it's all coming back to one assumption. And that's that you have a consistent income that's probably growing over the span of your career. So understanding why we look at it, I think, is the biggest piece to it. It's not just another insurance, right? It's there to protect everything else that you're trying to do, whether that's with us or a different advisor. That is the one input that drives everything else. So I think just coming back to that kind of understanding on why we look at it. Now, when we meet, we can go through the what and the need and kind of the specifics that fit your situation.
Mm-hmm. And I forgot, you just inspired me to think of one more thing. If someone's pressuring you to quickly sign an application, hurry, I think that's a concern for me. I think it's important to look at all your options, not be rushed into a decision. Certain schools, we can get a student discount, and it's technically called a multi-life discount, and it's a state law that if a carrier receives 3 or more applications from a group of people, and a group could be a school or it could be a practice, for example, all apply at once, the carrier's allowed to discount. But that discount is even available past graduation. I think only 2 of the carriers that we really love to use out of the 5 that we really like offer that discount. It's a choice that a carrier makes. But one of them allows people to sign a free application up to 3 months past graduation, and the other one allows up to 6 months. So there really is no big fat rush. And we don't want to miss that discount window. It's really big.
Yeah, for sure. We all know we're all poor right now, too.
But it's not true that you must sign an application up to the day before graduation or you won't get that discount. That's not accurate. So I think pressure is not ideal.
Yep. And just to go with that again, I think to have a full breakdown of your coverage and again, an educational discussion about it, look at an illustration that shows you kind of all the ins and outs and pricing, doesn't require a signed application or for you to sign something. So my recommendation, again, in our opinion, it's hey, go through that full educational process and understand it before you sign an app and decide to apply for anything. You'll ultimately do what you're comfortable with, but I think that would just kind of be one of our best practices for you.
Yeah, and just to decodify, because like VetMed, there's language that VetMed has. An illustration is the same thing as a quote. And, to Max's point, quote or illustration, they're synonymous. There's a lot of different ways to design disability. Think about like homeowner insurance, for example. I have a rider. It's called a rider for my expensive bikes. I'm a big cyclist. And so I have a rider on my homeowner's policy to cover my bikes should something bad happen to one of them. Okay, stolen or whatever. Disability also has riders, and there's lots of them. And so working with someone, to help you understand what riders are included or why they would recommend that or not, we can have all the riders and that would be great, but that would be a pretty expensive policy. So designing it, getting educated on how it was designed and why should be part of the process instead of just here, hurry up and sign an application. I'm not going to tell you how I built that. We see that a lot, and we don't really advocate that. We really like education, and we want to make sure that it's a big decision, right? If you get a disability policy, the goal is to try to get something that's going to fit you your whole entire career. So we want to get it right from the beginning.
Absolutely. And as I, listen to you here, you mentioned riders a couple of times, and it seems like it's an extended coverage, essentially. But can you define more of what a rider is?
Yeah, I'll put it my way, and then Max, you can, correct or add in. You're the expert here. A rider is, it's a way to tweak the base policy to fit what you want, right? To fit your situation. So let me give you a good example of disability. One of the riders that I really like, and I think it's important, but I like to educate, and then, somebody decides for themselves, is called COLA, cost of living adjustment. So say you were protecting some amount, say your disability policy was protecting, say, $5,000 a month. That would be protecting an income of about $95,000 a year. Okay. If you were protecting $5,000 a month at the time, and you can add coverage later depending on your income, and you really, really got sick long term, how much is $5,000 a month going to buy, say, 2 or 5 or 10 years later, even if you're really disabled for a long time? Not a lot due to inflation, right? Because inflation erodes makes everything more expensive. So I like to put COLA, especially cost of living adjustment, on a policy when someone's a new grad, because typically we're young and we're early in our career. And so if we really got long-term disabled, that's important. And so that's a rider. There's other riders. There's student loan riders. There's something called catastrophic. There's all kinds of riders. So we want to just really be getting educated on what's important, what riders should I be thinking about. Max, what would you add to that?
Yeah, you're spot on in how you explained it, right? If you think of a base disability insurance policy that costs X, these riders are features you can use to enhance that coverage, right? So the more you add, the more comprehensive, but you also pay for that. Spot on with what a rider is. I guess what I would add to that is, again, going back to the point of pricing is set, it's filed with states. It might vary by carrier or a certain discount or whatnot, but if we're showing the same carriers and discounts, the only thing that's going to impact the cost of that plan is design. So what riders did you include? How much benefit did they quote, or did we quote? I think bringing this back to, we typically like to at least start with, hey, let's start with a more comprehensive plan design. Now, if you just look at the price, it's going to look more expensive than what someone else might have shown. But again, that just reiterates, again, going back to the education piece, because by including it up front, now we can have the discussion about what each mean, why they're important. And then you can decide, all right, what value does that hold for me? Am I comfortable leaving that off or more comfortable paying to have it? I think that just kind of leads exactly into the process we use and why.
Mm-hmm. And I run into this a lot. As mentioned, I like the COLA rider. I think it's important, but I have seen people, meeting with other agents or advisors who didn't quote it, and it's at the same carrier and it looks a lot less expensive to them. And now they're like, well, I thought you said that they're, nobody can mark up or down pricing. It's because something's missing. So comparing apples to apples is really what I always say to people. Ask for an illustration or a quote. Ask for, not just here's your monthly premium. We need to know what that's made up of. Mm-hmm. And we want to make sure that if we're getting quotes from different people, how are these things quoted? Because if they're not equal, then we're not really comparing the same thing.
Yeah.
There is also a rider that limits coverage. So there's a mental nervous substance abuse rider. So I don't mean like nervous system. I mean like more like depression, anxiety, and substance abuse. Carriers group those things. Oftentimes these policies come with coverage all the way to the end. So if someone were quoting to age 65, you can go to 67 or 70, for example. But say you were getting a quote through age 65, you can have mental and substance abuse coverage all the way to the end. However, some carriers will give you a discount if you limit that on purpose. So if somebody says to me, I just don't see, or my family history doesn't point to that I could see myself going out on long-term disability due to a, depression, anxiety, or substance abuse, you can get a discount from the carrier by purposefully limiting it. So a rider can be addeth to it or taketh away, if you will.
Yeah, no, I think it just all comes back to that's why we show it, and now you're aware of it, and then we can remove it versus not showing it. You don't even know to ask about it at that point. The other thing I would say with these riders and DI policies in general, no different than, again, the whole reason we're doing this to protect that plan, to protect your lifestyle long term. These things can be added up front, and they should be, especially when you're younger, earlier on in your career, a lot longer to go to get to that finish line financially. In the future, we can always start to pare your policy back and take these off without underwriting, right? So a lot of times we'll say, hey, you should have catastrophic coverage. So that's a rider where you receive additional benefit if it's a severe or a long-term care-esque disability. Or to Darby's point, having a COLA rider. Those are things you should have early on. As you get further along in your career, you're closer to financial independence. You're going to be less reliant on that in the event of a health event. Now we can start to peel those things off, find more cost efficiencies, all the way to the point where eventually you're going to get rid of a DI policy, right? It's a temporary necessity and cost. Once you're to that point of financial independence, you can then reallocate those dollars. Same exact idea as you go, kind of paring it back through. Is that something you'd agree with, Darby?
Yeah, absolutely. And what I'll tell my clients is, look, when you tell me I no longer rely on my income, then we might look at paring it down or getting rid of it altogether.
Absolutely.
So that's, and speaking about price, I thought that would be helpful to kind of talk about price. Everybody's going to be different. It's all based on age, okay, and how much coverage you have. So somebody might be starting with an income of a base of, say, $120,000, right? And then somebody else might be starting with a base of 95. And then later, maybe a year later, maybe we're hitting production. And so a lot of these carriers have big pools that we can add. Often with our student discount, if we were able to sign a free application near graduation, we don't have to pay before graduation. We don't even have to pay before our job starts. So a lot of times we want to get to that point. It's hard to come out of that school with 2 nickels to rub together. So
if you have 2 nickels to rub together.
Exactly. A lot of times someone's like, I've heard that I have to pay for it in order to get my student discount. No. Oftentimes they'll say, no, let's just get the free application and that locks in your student discount if it's available. But here's something that I like to do when I pay my own premium, because who likes to pay insurance premiums? Not me. And I'm in the industry, right? So somebody once said this to me a long time ago, and it made really complete sense. And I thought putting it into context is helpful. So I like saying this. So Jasmine, would you rather have job A or job B. So job A is going to pay you $100,000 a year, but if you get sick or hurt, it's going to pay you $0. And job B is going to pay you $98,000 a year, but if you get sick or hurt, it's going to pay you $60,000 a year tax free. Which job would you like? Yeah, it's obvious,
I think
right?
when you're thinking about, when you're thinking about it, like how much risk am I willing to take on? And at the same time, like what else could I do with that extra income I have, assuming I don't get sick or hurt? But you're also telling me there's a really high chance I'll get sick or hurt.
Yeah.
So I'm more risk adverse. So I would go job B.
Yeah. And I've never actually had anyone choose job A. Job B just seems to make sense. Now, why did I use those numbers? It's about 2%. Disability in general depends on how old we are when we secure it, but it's going to cost roughly 2% of our income. But what's interesting is, and me too, when I see my premium, I'm like, oh, I don't want to pay that. So, you might be looking at your premium and going, I don't want to pay that, but you chose job B and it's 2%. So that's a really good rule of thumb. Now, again, sometimes people, are putting it into place. I've gotten so many calls over the years or emails from people saying, gosh, I never got disability and my good friend just got breast cancer, or my other friend works with equine and, got hurt or whatever. And maybe they're into their late 30s or early 40s, for example. Those premiums can be expensive because we pay at an attained age. So that's where Max was talking about design. We might start looking at things like taking off inflation protection or limiting that mental that I was talking about, or making it work for somebody so that they could at least get income protection without, paying more than 2%. But that's just a rule of thumb. It's not a hard and fast rule. And students can sometimes get those discounts that I was talking about, making it less than 2%.
Yeah. I think to kind of segue off that, a little related, a little on different track here, but so one of the biggest things we look at, again, we've talked about all this, when you're graduating, securing coverage, there's discounts available, right? The younger you are, the cheaper it's going to be. So you're locking in a policy, at least on the private side, with a guaranteed locked in rate for the life of the policy. The other thing we're looking at is locking in or securing your future insurability. So one of the primary riders we look at adding to a policy is what we call future increase or future insurability rider. So that is going to allow you to increase coverage throughout your career as income grows up or income grows, to allow coverage to grow with that income, right? So the more you make, the more of a need there is for coverage. So I would just make note of that, because we've talked about underwriting with private carriers, qualifying medically based on your health history. That is a big piece to doing it now. The younger you are, hopefully the healthier you are, you can lock this in. And now as you increase and kind of run up that bill of health, as you will, now those things will still be covered where they might not be if you have to underwrite at that point. And what Darby was saying just brought that to mind for me. If someone goes through a scare with a friend or a family member, someone they know, or frankly, something happens to them, now they're coming back and they wish they had the right amount of coverage that they weren't paying for before, or they're willing to pay anything where before it seemed expensive. But at that point, it's too late. Right? I always think of, hey, we're here to plan for those situations, not predict them. So I think that kind of is a good way to keep that in mind and in perspective.
And to Max's point too, like, say someone's coming out of vet school and they're going into an internship, right? And maybe they're only earning 40 or 60 or 80, depending on where they're going. What we'll do then is we'll design a policy that's very small to fit that smaller income. And so it's all about designing the right size. And then to his point, depends on the health and the underwriting and all that. But oftentimes we'll have this giant pool, if you will, the future benefit increase that we can add as they make more. So maybe they go into a residency and their income stays small for 2-3 more years. That's fine. We'll keep it small. But then they get out and they're boarded and they have this great big income, or maybe they just get out of their internship and they go into GP or ER and they want to add a lot of coverage. We've locked in their insurability. So no matter what happens to them, it's kind of too bad, so sad for the carrier. They'll never look into their insurability again. And that can be valuable. you know? So
Absolutely.
that's another reason why it's important to look at it, even if heading into a small paid internship, just to get a little small disability policy, lock in that durability and perhaps a student discount if it's available to you. So, you can see throughout our conversation that this is a very complicated insurance.
Mm-hmm.
We haven't even
Absolutely.
scratched the surface. I like to sit at Max's feet and listen to him because he's a storehouse of knowledge for all things disability.
Absolutely. So, like you said, it's very complicated. We've talked about some timelines before graduation, 6 months after graduation, depending on the carriers and whatnot for these discounts. But what does the process even look like for starting to secure these things? And we also talked about the educational piece too, needing that before we even sign anything.
Yeah, that's a great question. And I meet with so many people each year, about 250 new grads a year. So I hear it all. So what I like to do is I like to understand where somebody's going, what their new income is going to be. And then I will look at what their benefits are. Some people are going to work for practices that offer group. And again, it's not always the strongest insurance. Maybe we supplement it. But the point is we want to know that. And then what I'll do is I'll go compare the carriers for them and neutrally and the right fit, and then a design that I recommend. Like as a veterinarian, we're going to make certain recommendations, and then we want to educate our clients why. And if somebody likes it, I generally I'll take an application, and you have to go through an advisor to apply for disability insurance. It doesn't cost anything. You're not signing up, you're not committing, you're not paying for something. The point is to get an offer. And so we'll just sign those applications sometimes April, May, even June-ish. And again, you can apply after graduation. Jasmine, I generally recommend people apply before graduation, not because of that discount, but because they forget. And they'll move.
There's a lot going on.
The U-Haul truck pulls up and they're busy, and then I'll have people come back 8 months later and say, okay, I'm ready. And I'm like, we can't give you the discount anymore. It's not ours discount, right? It's state. So we just take an application. And then depending on whether someone's going through full underwriting or limited underwriting, there's lots of different programs. We wait for an offer. And then once we get that offer, even if someone wakes up in the middle of the night and they say, I want to change it, I want this, or I don't want that, or I want to tweak this, no problem. Nothing was carved into stone. It's a very flexible process. So we can say, great, carrier, Jasmine would like to accept her offer, but she really doesn't want it to start until mid-July or first part of August. And I'm giving examples like maybe when your job starts. Because as I mentioned, if you don't have two nickels to rub together, it can be hard to pay a premium. So we can drag our feet a little bit and start that policy when it's affordable. Carriers won't sit around and wait for too long once they've made an offer, but we can wait. So that's really the process. It should be not rushed. It should be educative. Should be looking at quotes and saying, hey, can you compare with other carriers? All that kind of stuff. Once we take an application, that locks in that student discount. I do that really right near graduation. And some people are still trickling in even right now saying, gosh, I didn't meet with you. I forgot. Totally fine. Max, would you
and I think you can almost, I would say you can almost just, again, extending off what you said, almost break it into two pieces from a process standpoint, right? There's the preliminary side where you're meeting with us. We're walking you through quotes. We're helping you understand what's what makes sense for you, and kind of settling on that final area or option that you want to apply for. The actual, once you get to the second piece of actually applying, it usually, just to get a little more granular, is an e-application. So something that you can do online. And then you would go through as the applicant what they call a telehealth interview. So either over the phone or also online, answering questions about your medical history, anything you've been treated for, listing out where you've been seen by medical providers. And then the carriers will review all that, potentially order records to review. But that's about the extent of what you have to do. So again, the application and the medical interview, you're not going to have to go do in-person labs or exams. Those are pretty rare these days. Now, if you apply for a certain amount, or there is medical cause for concern, it might come up. But for the most part, it's application, tele-interview. The carrier kind of does the rest. So it's really not that intrusive or time consuming on your end once you kind of get through the education and understanding what you want to apply for.
Yeah, and somebody might be thinking, well, geez, I have some health history I'm worried about. So one of the things that it's important to do is share that with your advisor, right? Because some things we really can't get private insurance for, and then there's, that's where I'll be saying, here's your other options. Or sometimes the history is really not that significant and it won't be a big deal. Like I talked to someone just today who said, hey, I have migraines. They aren't that bad, never missed work or school. That might not be a big deal. So if there's history, there are also some other options out there. And so that's where product neutrality again comes back into the conversation, because some carriers have options that others don't. So it really comes down to, having a conversation, looking at what's the right fit, size, shape, carrier design, and then going through that process. So some people don't have to do that telephone interview, but it really depends on what we're trying to do.
Yeah, and that's always a part of that first phase, the educational or consultative part with Darby, right? She's going to ask you for information about that. Any financial advisor you're working with should be doing that, just to make sure, again, product neutrality. One carrier might view a health history different than the other. So that is part of our process too, is, hey, this might be more favorable for you, or expecting what an offer will look like, to make sure that, again, you're fully educated and we're not really wasting your time by the time we get to the application and offer standpoint.
So I think the take home of today is no one's ever going to know all these details unless they want to come work for me. I'll teach them. But I always could use help. But I think the take home is, don't assume that just because you see long-term disability, for example, on your benefits package, that it's fantastic. Not all policies are equal, and you really, really want to get it right. So for example, employer offered, you can't take that with you if you leave that job. That's not yours to take. And so that's critical to know. You might want to get your own supplement. And that's where we talk about, what are some private options? So really the whole take home from today's podcast is very complicated product. Talk to someone knowledgeable that you think is looking out for your best interests and not pushing you. And go through what's the right best fit for me, and then go through the process so that you walk into it, educated and empowered to make a good decision.
Awesome. Well, thank you so much. I love that summary. I think it was beautiful.
Thank you. I'm so glad you had us on. We're obviously very passionate about this one thing. It's really not all we do. It's really what Mask does at home office. But I do so much more than just disability, but it's such a critical thing to protect that income that you're all working so hard to earn.
Yeah. And it's something that's not talked about, hardly at all. I would not have gotten exposure to it if it wasn't for the VBMA, and I probably would have just signed whatever my employer was going to offer. And so I'm so glad that I'm more educated now. That's one of our missions at the VBMA, is education, and am able to make better decisions for myself going forward.
That's great. I'm kind of jealous because VBMA was not available when I went through vet school. And I sure
we get that a lot.
And I sure would have been part of it, because it's really a wonderful organization, and I just love all the topics that you bring up, and it's a wide, complicated world out here. So I believe in your mission. Thank you.
Thank you.
Darby is an investment advisor representative of Cetera Advisor Networks, LLC. Securities offered through Cetera Advisor Networks, LLC, doing business in California as CFGAN Insurance Agency, LLC. California Insurance License 0644976. Member, FINRA, SIPC. Advisory services offered through Cetera Investment Advisors, LLC, a registered investment advisor. Cetera is under separate ownership from any other named entity.
If you want more information, you're welcome to reach out to me. The best time to really look at disability again is, maybe in your fourth year, closer to graduation. But my email address is darby.affelt@northstarfinancial.com, and I'm going to spell that out. It's hard to hear. DARBY.A, F like Frank, F like Frank, ELD like Delta, T like Tango, @northstarfinancial.com.